$5,000, you still don't get to the you still don't get to the point of the whales. The whales orders makes large orders, whereas the small capital traders make small orders. So it is quick. It is easier to take you out. Especially in the manipulative phase of the price delivery algorithm, they get you out always on the wrong side of trade. Because of deception, you think the market is going to go bullish. Before you know it, you enter, you get trapped the other side. Before you know it, you're already into floating loss. And because of the fear of losing all your capital, you end up closing. But closing at what? At a loss. You see that? Or if you develop a strong heart that, okay, let me stay for a while, let me watch, maybe it will come back in my favor. Before you know it, you're liquidated. Why? Because you don't know what you're doing. You really don't know. You think it's easy ride in the futures market. It's one of the most manipulated. It's for the smart. It takes a little bit of learning for you to understand and appreciate that area of financial instrument. Then so that when you're trading it, you know what to do. Okay, and the little secret always is to learn and then understand how the smart money is traded. Go ahead and understand the smart money concept, because that is the basis of most of the smart money's trading strategy. If you understand the smart money concept, there's a way to also, to build it on addition to the fundamentals. It builds you in helping you trade alongside the traders, okay, alongside the smart money. So you won't be often falling victim of the manipulation and liquidation. That is for the futures. So trading is a broad arena. It's really broad, and we shouldn't stop learning, because the more we open our mind and put it upon yourself to learn, to be students of knowledge, we shall always learn something. We shall always learn, and we shall never be the same. And make it a point, because when you acquire this skill, this is a life skill, ladies and gentlemen. Some of us who share with you here, we didn't just wake up overnight and then we started doing this, all right? Some of us who share signals, some of us who do the coaching and the trainings with regards to trading in the financial markets. It's not an overnight thing. It took a little bit of a sacrifice. It took a little bit of some resources. It took a little bit of our time to try to, because you're hungry, you want more. You get that? You really want more. And the more you have that mindset of wanting more, trust me, you will always get the more you want, and it will be good. So it's not something, it's not extraordinary. It's not something that that you can't learn, that you can't master. It's just having a proper guidance and being open in mind to unlearn and relearn. It's just like, they say, if you want to prosper, if you want to have a new picture in mind, you want to have a new beginning in life. You've tried here and there, things are not, coming. You've tried a lot of things and they're not coming, even including marriage. If you've tried marriages, oftentimes you're breaking out, you're having issues in your home, in anything that you do, and you want a reset in life and you want something new, you want to have a new journey, you have to empty your cup. Empty your cup and allow it to refill. You can never fill in a cup that is already full of water. You would be wasting. Empty that cup and allow it to refill. Meaning you need to allow for reset. You need to put to yourself, you need to make it upon yourself. So, you know what? I think I've had enough. I'm ready for this. Let me do this. Let me start. Let me pretend, even if I'm not really on that level, but let me pretend that I didn't know nothing. Let me just have some new beginning. Let me begin this journey afresh. Let me start all over again. Probably this time more careful. Probably this time more guided. Probably this time with a lot of peace of mind. No rush, no hype. So that is what trading is. That's what you will attain in trading. Just have that, reset in life. If you try 1, 2, 3, for example, and you get liquidated once. You tried out the second, you get liquidated. You tried out the third time, you got liquidated. Like you're seeing you're being liquidated oftentimes. Hey, stop it. Just stop. Stop. Pause there. There could be something that is not right. There could be something you're doing which is not right. Try to reassess yourself. Try to reset yourself. Okay. Okay. If your challenge is, let's give an example. If the challenge is fear, if the challenge is greed, having that mindset of wanting so much with little, if that is the challenge, if the challenge is how to identify coins to trade, if the challenge is, have something, have a reset, talk to somebody, all right? Talk to somebody, or probably have something, some one-on-one chat. Try to assess for new ideas. Try to have a new approach. Try to derive new strategy, because probably that one is not working. Okay? It's always open. It's not a do or die. I always advise people that trading is not a do or die. If you try today, you've tried like it is not working yet, that means that something is missing. That's when now some of these classes becomes very important for everyone. Okay? But it's so surprising that at times we find a Zoom like this is having very few people. Okay, if it would have like a few people like this, but then people take it upon themselves in their own time of convenience and they do something, some learning, it will be well. But really, the people are not doing that. And then you find a lot of people, sometimes spending 1 year, 2 years, 3 years, has been in business since like 2021, 2022, and they've really learned nothing. Like if you take them to, if you leave them by themselves, they cannot really, they will not survive in trading. They will not know how to handle. They will not know how to go about everything. If a signal does not drop, they feel that is the end of them. They cannot do anything. Why? That is the mindset. Your cup is so full, and you are not willing to empty it at all, so that a new one can refill. You're so rigid. So, ladies and gentlemen, starting from that point of view, what I'm trying to drive forward is, if you are supposed to be successful in this business, if you're supposed to be successful in trading, not even your upline or the person who introduced you in the business is liable for your success. No one. It is you. Because it is only you who knows why you joined the business. It is only you who knows what you want. It is only you who knows your problem. It's only you who knows your status, your financial status, the challenges you're going through. By taking the step of joining this, you're thinking probably this could be an avenue that could, bail you out. It is only you. The person who introduced in the business is just a pathway. It's just like a mediator. It's just like somebody who is it's someone who just introduced you and gave you an opportunity that, you know what, there's something here, there's some gateway here. We could use this path, to settle your problem. There's a pathway here. I'm trying it, is kind of working for me. Maybe it will equally work for you. Come on, can we try it out? So the person who introduced you or your upline is just like an angel, okay, sent to you to show you the way. But they're not going to completely be responsible for your success. Forget about that. I am one, for example, let's say I was not introduced into trading, but the person who introduced me in Royal Q is Julius. And he knows it very well that the moment he introduced me to Royal Q, I only needed to understand how the boat works. The rest was my personal efforts. You get that? The rest was my personal effort to get to the level I am, to the point where I could even teach him who introduced me in the trading. I mean in Royal Q, with the trading. That means I had my own personal discipline, effort. I knew what I wanted, right? So look at me. He's not here. He does not support me in any way. He has not really done that much, apart from when we're just getting started to help me understand the boat. But here we are. We're still moving on without him. I still stand very tall. I stand very tall. I stand tall, and I'm really enjoying. So it's personal decision, ladies and gentlemen. Okay, it is personal decision. You have to make a bold decision and say enough is enough. I gotta succeed in this, because you can't take 1 year, 2 years, and you're not seeing any tangible results, and you think you're doing things right. There's something wrong. Okay. If you're not attending Zooms, try to set aside the time. Come on Zoom. 1 hour, 30 minutes. You can do it. If you don't have that, go for something. Approach somebody who could support you through in your time of convenience. Try to learn, just learning, So there is you will always have something new. At least you will have something. You will have a different opinion and approach to the market again, and you'll find yourself succeeding now. If futures is not working for you, you leave it for now. Relax about it until you get sufficient knowledge about it. Go back to the sports. It should not be something that should make you castrate or cast yourself for joining the business. No. You get that? You can have floating loss. For me, I can have a floating loss of up to like 10%, 20%. You get that? And I won't be afraid. You get that? I won't be so much afraid. Especially for as long as you're trading a project, a coin and a project that has a future. Because I cannot also tell you that all the crypto projects have futures. There's some cryptocurrencies or coin that, for me personally, I don't trade them, and I've never shared them in any signal. Even if I see there is a beautiful opportunity in them, I don't share them. And for those who have always followed my signal know that I don't trade many coins. There are specific coins I trade, and I share signals on, not any coin. No, that is my own approach, basing on my own research and understanding that you cannot trade every coin. There are other coins that are pump and dump. Like today, there are 100. The next time, if they're going to dump, they will come by 100. How on earth can you trade such a coin? There are some coins that have very low liquidity. There are other meme coins that are, the people behind there you can't even tell where the future of that coin is going to be. So me, I trade coins that I know have the liquidity, the project has a future, and it's something that do not so much pump and dump, So it all comes down and boils down to you understanding what Royal Q is a very good opportunity. You should thank yourself for joining Royal Q, because it opens for you opportunity to learn and understand the financial market. It really does. It really does. And whoever regrets joining Royal Q, then that person is a complete, how would I call it? Okay. I would call that person somebody who is mad. Whoever has not appreciated joining Royal Q, that means the person has not done much. You get that? This person has not done much. The person came with a fixed mind, a fixated mind. A fixated mind thinking, since they're saying it is a robot, it is going to do everything for you. My dear, some of you are lucky that you're joining now, when even the Royal Q has some features that has been incorporated that could support you trade. When we started, there was nothing like that. At least now I see some indicators on the bot. You have some indicators on which you can base on to identify coins in the bot to trade. Back then, it wasn't there. Like, we really started, a lot of development happened when we already traded with the bot. A lot of them. And some of you should be very lucky. For us, we started as if we were, I would call it as if we were part of the pioneers. We started from scratch. You have to find ways out. We came at a point where the only avenue, if you don't know how to trade, is probably either to sync a strategy from those who understood the business. But if you know, then you have to derive your own strategy to make money. You get that? So here we are good. We are good. We have mentors, the section I've introduced. We have, indicators incorporated. We have the futures market. By then, it was not there. Like a lot of features were not there. But nevertheless, those are part of the development. But now that you're there, now try to also make yourself beneficial. You benefit from the board. Okay. Yeah. So that aside, that is just an insight and a nugget for the morning. Whoever can think about it and make it work, that is really up to you. If you also ignore it, it is equally up to you. After all, at the end of it all, when the session ends, everyone is going to go back and make their money. You've got to concentrate and see ways of making your own money from the same market that we are learning about. So the difference will come on how you understood it and how you are implementing it. You get that? Yeah. So that is that. So let's yeah. So I understand from the point I'm going to pick up from today. I understand that Leader Emmanuel, there are a couple of parts that were already handled. I was told they handled the support and resistance, and probably I think he said he also took you through on how you can make entry based on support and resistance. So for those who have been following the class, I believe it should be good up to that point. I also trust that along the process of your learning, there were also taught candlesticks, and yeah. So what I'm going to pick up from is possibly I just want to discuss with us a little bit about candlestick pattern especially, and we want to see, after understanding support and resistance, we believe that understanding support and resistance is one of the fundamentals of trading, because understanding support and resistance possibly helps you to. Let me first share my screen. Let me share my screen. Okay. Excuse me, I'm having a little cough, so if my voice is not very clear, it will be because of the cough, but I trust it is clear. Yeah, I hope my voice is clear. The network is not cutting. Is it? Is it clear? So the reason why sometimes you need to understand support and resistance, which I believe you have been told, this will just be a recap, is that the support and resistance, first of all, helps you. One, it helps you monitor a trend. Monitor trend, market trends, because it is very important for you to monitor market trends with your knowledge of market structure, of the three market structure movement. That is uptrend, downtrend, and then the sideways market structure. It's very important for you to also have the knowledge to monitor the market parameters you need to put in consideration when you're monitoring this market. Because the essence of monitoring the market is you're basically trying to monitor the progression of the trend. You want to see how long the market is going to remain in that particular trend, all right? Such that if you're making trade entry opportunities, decision, not opportunities, when you're making trade entry decisions, you are basing on the progression of that trend, okay? Yeah, so it's just to help you see how long it's gonna remain in that particular trend. That's why when you're drawing support and resistance, like for example on a sideways market, you draw it and extend it to the future, because you're basing on the information that has already happened, and then drawing this support, the resistance and support line, you are projecting into the future. You want to see if the market is moving sideways. You want to see how long it's gonna continue in that manner, right? Because the more it continues in that manner, Along at the same time, you're identifying trade entry opportunities, okay, and exit opportunities there. So you're identifying trade entry opportunities. So you'll be trading in that ranging market for as long as it remains in that state, with opportunities being identified around a support after confirmation, of course, of a reversal, and then you make entry. Okay, so the essence of drawing this support and resistance is to help you monitor the progression of the trend. The second importance of drawing support and resistance, it helps you really also identify possible or potential price reversal points or areas. So it helps you identify the possible or the potential price reversal points. Now remember, when the price, when you're having a price movement, these prices reacts to this support and resistance area. They react to them. Whenever the price is in the course of an uptrend, or when the price is rising, upon approaching a resistance area or a resistance price level, it is going to react. If it is in the course of a downtrend, all right, if it is moving in a downtrend direction or downwards, once it approaches a support, it is going to react. And the reaction, price reaction upon approaching these areas happen in two ways, which I believe you should know. That a reaction can be, for example, it can be a breakout. Okay? A breakout means simply that the price is leaving that area, is leaving the zone within which it was trading. Okay? If it is in a sideways market, literally what will be happening here is what we call an expansion. When you're basing on the price delivery algorithm, this will be the third stage of price delivery algorithm, which is expansion or price delivery on the intended direction. So here, when the reaction is happening, the price will be breaking out. And it should be a true breakout. You know, we have two types of breakout. There's a fake breakout and a true breakout. Okay? A true breakout, depending on the direction, has to be confirmed by the preceding candlesticks after the breakout. And thereafter, there's also it has to really confirm. There's a confirmation that has to happen. All right, for you to call it a true breakout. A fake breakout happens in the opposite way. A candlestick will move above or below the support, and then the second one, which is supposed to help you confirm, will open from outside, the area is broken, and then comes and close again inside, where inside the areas it had intended to break out, from. So that would be a fake breakout. It is a common scenario in the manipulative stage of price delivery algorithm, when whales are trying to fill in orders, or they have waited for so long for their orders to be filled up, so they have to manipulate the market to take out liquidity, and take out the stop loss traders, get some people or trap them onto the wrong sides of trade and get the liquidity from whatever is going to be closed from them, from those who are in the fear of missing out category, to take liquidity from them. So it's common in the manipulative stage of price delivery algorithm. But the most important thing here is, once the price is approaching a support, for instance, expect two reactions. Either it will be a breakout, or it will be a support, meaning the price will be held. It will be held. It will be prevented from continuing to go down. So this becomes like a support zone. And when a support zone happens, that means what follows next is a reversal. A reversal. You get that? It is a reversal that follows. Now, when we talk about reversal, we literally mean either a reversal intended for price retracement, or it may be a reversal intended for a shift in market structure. So when you hear some people talking about reversal, can either mean a retracement or a pullback, as most people know. Okay, and a pullback is intended to to correct the market or to bring about market stabilization. But it means that that is not a shift in structure. It means it is temporary. That reversal is temporary. The price is trying to just retrace or pull back, and it is going to maintain the previous trend. It was going to come down again and then now break below the support and continue in the previous downtrend direction. But when you talk about a reversal, that is a shift in structure. It means that is a complete price trend reversal. That means the trend is completely shifting from the downtrend to an uptrend. So when the price comes towards a support, expect a reversal, either a retracement or a shift in structure. And all of them, when they happen, the things that follows, right? That is the first reaction. The second reaction is a breakout, meaning the price is going to break above, below the support. So understanding support and resistance helps you to know the potential price reversal area. It prepares your mind for the events that are most likely going to happen around that zone. Now, if you opt to make an entry and you're a sports trader or you are a futures trader who intends to go long or to take a long position, you will only make decision of entry if the price is supported, if it is supported. Meaning there has to be a reaction, trader's reaction intended to move the price up around that support zone. That is only and only when you can make entry. Okay? That is only and only when you make entry, if you confirm that the price has been supported. And a confirmation of price support, in this case, is accompanied by traders' reaction or behaviors, which will be translated in the kind of candlesticks or candlestick pattern that are going to be formed around that support. You get that? Which is what we're going to look at, the candlestick pattern. So the behavior of traders when the price is approaching this price reaction zone we are calling support and resistance is what gives us the confidence of deciding to make entry, depending on the direction you want to make entry on. Are we together? Are we trying to learn something? I hope it is not too much. Just so are we together? Are we trying to follow? Is it making sense? Yeah, if it is making sense, let me see a one on the chat. Come on, let's react. Let's react. Yeah. We are learning. This learning has to be interactive. It has to be simple. It has to be something easier. There's no magic here. No history of Napoleon. There's no science of evolution. No, it's just what it is. Okay. All right. Thank you. So let's proceed. I think we are together. Yeah. Let's come back. So I'm still building up on what you learned, support and resistance, because I want to keep it to I want to show you how the chart, the candlestick, sorry, not the chart pattern, but the candlestick. Chart patterns and candlestick patterns are different, all right? So we are talking about the candlestick pattern, not the chart pattern. Yeah. So the candlestick pattern, I want to see how it fits in there. Because you can have the knowledge of support and resistance with that aspect of the knowledge of the candlestick pattern, you're going to still be jumping into the market blindly. So the real events of what brings about a price reaction at a particular price reaction zone, call it support or resistance, is dependent upon the trader's behavior as the price is approaching that zone. And traders' behavior are clearly depicted, are clearly instated, they're clearly reflected on the type of candlesticks that are going to be formed around that zone. It is what is gonna, it is what should signal you, it's what should give you the signal of what the intention of traders is at that point. Is it to push the price up? Is it to push the price down? Like, what is the intention? That is the signal you should get before deciding, And the third thing of you drawing and of learning and understanding how to draw the support and resistance very clearly and well is that apart from helping you monitor the progression of the trend and also helping you identify potential price reversal area, it also helps you know areas of trade entries and exit, where you're supposed to make entry at, and then where you're supposed to also exit from in the market. If you're a sports trader, you know that best entries are made around a support zone. But before you make entry at support zone, you will not know if you don't establish this support zone, right? Based on what already happened. So by you marking your support zone as the price is approaching your support zone, you know that no matter what, that's already an insight. You know automatically that this is going to be my entry zone. But my entry decision is going to be made based on what happens around that zone. You get that? By first of all, me knowing and seeing the behaviors of traders around that zone. If I realize that the intention of the trader is good, their intentions are good and it is intended to push the price up, then I will make entry. So, but literally, you will also have already an insight. You have already a preliminary information on your areas. You have your eyes already on something, on some area where you're most likely going to make entry at, right? It's just a matter of now waiting to execute upon, having other supportive information. Then, you enter. So it helps you have to know the possible entry zones and exit in the market. Yeah. So with that background, let's dive into the candlestick pattern. Yeah. So, just a minute. Okay. So let's look at the candlestick pattern. Now, what are these candlestick pattern in particular? Let me get my so let me try to save just a minute. Let me get my something here that we're gonna base on. So we're not going to go so much into these details, okay? Because it's what they already taught you. I trust that you've already been taught. So me, I'm just going to go. I've given you the basics. I hope you don't mind. Just giving you the basics. So I'm not going into this. I'll come to the candlestick pattern. So now, when we talk about the candlestick pattern, yeah, basically. So we're looking at those candlestick formations that occur on the chart that tries to signal traders' intention in terms of price movement. Okay? When you talk about candlestick pattern, we're looking at those candlestick formation, which upon formation on the chart, if we sight at them on the chart, they should be in position to signal or to give us information or to give us a clue of what the intention of traders at that point in time is with regards to the price movement. These candlestick patterns, we have those candlestick patterns that indicates or that signals a bullish movement. His intention is to push the price up, or is to make the price move up, or is to continue pushing the price up. That those candlestick pattern formation that once you sight at them, they give you information that the trader's intention at that point is to push the price down. So you'll be in position to know when traders are willing to take off profit, or when they are willing to really buy, to really put their mind into buying and acquiring the assets. And then you'll also know when the trader's intention is to take some profit or to sell. Baby? Okay? So that is what the candlestick chart patterns basically is. Now, these candlestick patterns are in around 3 categories. There are those candlestick patterns that appear singly, like if you only have one candlestick, whose signal is very powerful and it tells you the trader's behavior or intention immediately once you sighted them. There are those ones that will occur in pairs. Okay, they will occur in pairs. It's a double candlestick pattern. And then there are those that will appear in like 3 together, they're the triple candlestick pattern, like they appear in 3 to terms with what the intention of the traders is at that point. So that's basically what the candlestick chart pattern is. Now, before, just like I said, as the price approach a particular price reaction level, know and put it at the back of your mind that what you're thinking as a trader is what any other trader is also thinking. You have an intention of making entry into the market. That's the same way. That's the same thinking that any other trader is also thinking. You get that? They have similar thinking. But then about the execution will be dependent upon the candlestick pattern, the behaviors of traders around that area. Now, when we talk about, for example, we look at the single candlestick pattern. The one that comes to our mind quickly is the hammer. You get that? It's the hammer. A hammer is a bullish candlestick. A hammer is a single candlestick formation that signals traders' intention to push the price up. Okay? The way it's going to appear is already an intention, it's already a signal that the traders or the buyers are already beginning to dominate the market. It is already beginning to dominate the market. And most at times, when these candlesticks are formed, the effect of what we see in them is what is going to happen in the following trading sessions, or it is what is going to happen in the following candlesticks. The effect, okay? If the effect is buying, is a buying pressure, okay? That is being exerted by buyers due to high demand. Then the same effect is going to continue in one or several other candlestick that will happen just from that particular candlestick. So the hammer is typical of that kind of candlestick that once you see it formed, it's already an indication that the buyers are stepping into the market and they are now willing and ready to push the price up. The hammer candlestick tend to appear either towards or at the end of a downtrend. After a long downtrend or after a serious downtrend or drop in the market price, when the price drops, from your understanding of demand and supply, once the price drops, automatically, that particular item or asset has to be on demand because it will be very cheap. So it is an opportunity to buy. So because our intention is as traders or as a sports traders, our intention is to buy low. In fact, if need be, we want to buy the lowest, at the lowest or at the cheapest price. So if the price drops significantly, we look at it as an opportunity to buy as traders. So because the price is so low, after a progressive drop in the price, after a long downtrend, we are going to begin taking effect into buying. When we begin taking effect into buying, in a trading session like the hammer, in a trading session represented by the candlestick called a hammer, there we already begin seeing the influence of buying. We already see the effect of traders jumping into the market and dominating the trading session, especially by the buyers. So when the buyers dominate the trading session, we're going to see the effect coming out in the hammer candlestick pattern, which later on will be transferred in the following candlestick. All right. So a hammer appears in the course of a downtrend, and it is of two categories. As you can see here, you may find a hammer which has no upper wick. You may find a hammer that hammer, it has to have a very long lower wick. Whether it has an upper wick or not, that doesn't matter. For those that will have the upper wick has to be very short. Secondly, it has to have a small body, like the way we are seeing. And thirdly, it is normally green in color. It is a bullish candlestick. As simple as that. All right? It is as simple as that. Now, when you come across a hammer in the course of any downtrend on any financial instrument, you should know it that is already a bullish signal. It is a price reversal signal. It is a trend reversal signal. Literally, what it should tell you is that once you confirm that that is a hammer which has already been formed and you want to make entry, it's as easy as waiting for the candlestick to close and then immediately enter in the next candlestick open. Meaning, if you have this is the major candlestick, and then immediately it closes after you confirming that it is a hammer, just make entry on the next candlestick open. All right? And then what do you do next? To take your profit, measure from point of entry to the most recent resistance or the most recent swing high. The percentage you get after that measurement becomes your TP. Then, to establish your margin call drop is as simple. Because you already have the knowledge of support and resistance, you're just going to look out for, from the point of entry, you're going to look out for your most recent swing low, or what you call a support zone. The most recent, the most closest support area or zone in relation to your market price. From that point of entry, just measure that percentage. When you get it, the percentage you get, go and establish it for your margin call drop for the first call. It's as simple as that. That's why I'm saying you take profit to the nearest resistance. Here, exit at the nearest resistance. To make entry, enter at the next candlestick open, meaning after the hammer candlestick. Once the next session opens up, just go and make entry immediately. Take your profit or exit at the nearest resistance. From point of entry to the nearest support, that is what you're going to establish for your margin call drop for the first call. Now, ladies and gentlemen, you need to know this. It's the way some of you establish your margin call drop, literally just tells that you don't know what you're doing. Sorry to say this. Like, people establish imagination of, I would call it, how is it? Is that English there? Imagination or margin call drop. Like you just imagine, oh, I'm going to put 0.5 for first call, 0.6 for second call. I'm going to establish, I'm going to make it just throughout 1% from the first call. People establish up to 100. People establish up to 90. People establish up to 20 margin call drops. I mean, margin calls with 1% as the margin call drop for each. That is pathetic. That is really, that's gambling. That's not proper. For someone who knows what they're doing, you establish margin call drop based on what you see. Ladies and gentlemen, trading is trading what you see, not what you imagine. All right? Don't imagine. Trade what you see. Okay? Establish your parameters based on what you see, not what you are assuming. Okay? I hope that is clear for everyone. Let me see. Give me some love hearts on the chat. Some love heart. If it is clear. If it is clear, let me see some love hearts on the chat. Trading is not trading what you see, what you think. It's trading what you see. Trade what you see, not what you imagine. Okay? If you're going to say possible percentage drop that may happen, and when it is happening, you know where it is going to happen. You know that it will be happening at a particular reaction zone, which is maybe the next support, right? You know where the price is going to react. So you establish the margin call drop based on that. The percentage you're going to be setting on your robot should be based on what you saw. What you saw based on what previously happened. So it is what you expect to most likely going to happen. Okay, so it's simple, right? It's really that simple. Yeah, thank you. Yeah, thank you. Yeah, for those who, it can be clear one day. Yeah, it will never be clear one day. That's true. Yeah. Anyway, yeah, that's okay. That's okay. Just keep learning. It will be clear someday. Yeah, thank you, Shanita. So it's very important that you know that. So with the hammer, it's basically that. Now, the next candlestick pattern possibly, which is common, I'm not going to handle all, but I'm just going to give you a few. Yeah? Let's look at the shooting star candlestick pattern. The shooting star candlestick pattern is more like an opposite of the bullish candlestick. So for it happens at the end of an uptrend. It happens at the end of an uptrend. Okay? Happening at the end of an uptrend, it has a characteristic feature opposite to the hammer. For it again, it has a longer upper wick, and it has a very short or completely no lower wick. And in terms of the body, it also has a small body. Now, that is not the most important thing. The most important thing is the significance of this long upper wick. Okay? Why would it have a long upper wick? This is a sign of a selling pressure. The long upper wick is a very big sign of a building selling pressure. It is telling you that the sellers, there's too much profit being taken out. There are very many people shorting the market. The price is going down. It's already a signal. It is a signal. Meaning once you sight at it, just be very assured that the next trading session will be a bearish trading session. It is the effect of what has already started from here, which is going to be felt in the next trading session. It's just a signal. It's like a sign, giving you that tip that, you know what, prepare. From what is happening, this is going to be what is going to happen in the near future. Just prepare. So if you are in this trade, probably you had taken a long position. Maybe you entered around from somewhere here and you're already somewhere there. Then you sight at such kind of candlestick shooting star. Hey, take profit immediately. Take profit before the price dumps against you, or before the price comes back to your starting point or your entry point. Just take profit. Take it. Even if it is only 1%, take it out and relax, okay? Because what would have already happened here is a signal. It is already a sign of what is going to happen. Prophets were sent to give people signs of what will happen in the future, about what is going to happen. So they give a few. So it is up to you to prepare your mind. When Noah was told to make the ark, it was a sign. And Noah informed the people in that verse that, you know what? There is some flood coming. That's why I was instructed to, to make an arc. There is a flood coming. And there are those who say, no, you're lying. Oh, how can God destroy the entire world with flood? No, yeah. Yeah? But a sign was already given unto them. So that is the same thing here. There's a sign is already given to you as a trader. There's a signal already sent. But if you're stubborn, well, no problem. You will be left in a state of wish. Imagine this was like, let's say, 2%. Then you say, I want more. This is, you ignore this sign, this signal that was given to you. You ignore it. You say, me, I want 3%. Me, I set 3%. For me, the signal was saying 3%. I'm sticking to 3%. Well, you stick to the 3%. Yeah. You stick to the 3%. Okay? Yeah, you stick to it. You'll get the 3. Now, not that you cannot achieve the 3%, but no, sometimes when this kind of candlestick happens, just like I said, it may be a reversal, right? A reversal can mean a complete shift in structure or a retracement, which later on will pick up, right? So that means if you want the 3% and you see such signal and you ignore, probably what you're trying to say is, I'm willing to be patient until I achieve the 3%. And you just say, you know what, I'm not ready to wait for the 3. Let me take the 2, then take it. Okay, because a sign has already been shown onto you that there was a possibility of a reversal happening. Market may go bearish. It may be temporarily or for some time. It may be short-lived or long-lived. So it depends on what would have happened. If it is a retracement, then it is short-lived. If it is a reversal, then it's going to be long-lived for a while before the price will later on come back. So that's the signal. That's the essence of you just understanding this, that sometimes mastering the name of the candlestick may not be very important, but understand the significance of what that candle is, or what that candle tells you, because it is trying to describe the trader's intention. In this case, it is trying to tell you what the intention of the sellers, the people who had probably jumped into the market earlier and the price has risen significantly, now they're willing to take profit. There, it is trying to tell you that they are now ready to sell. They are ready to sell. And the problem with this is that when such signals are formed, such candlestick signals are formed, like we are seeing, it is already a shooting star. And it is telling you a possibility of a reversal to the downside. Now, what this one will tell you is why you can't help to remain in such trades when you see these signals is that when you see such a signal being sent, it means there are traders who entered earlier and they're taking off profits. But also do know that there are people who had set a TP higher than this level, maybe say up to 5%. When they equally categories of traders who are, they don't, floating loss is a disease to them. They don't want to see the coin going into red. If it goes into the red color, they fall sick. So that category of people, once they see the price dropping, if, for example, they'd also entered here and they were intending for 5%, and now here they're at maybe 2%, and then they see the percentage reducing, maybe now to 1.5. Before you know it is now going to maybe 1.3. What are they going to do? They're going to close their trade manually, right? They're going to close the, not wait for the bot to close for them. So when they close it like that, they're increasing the pressure. They're increasing the selling pressure. So meaning the effect of what started from this candlestick, okay, will progressively continue for some time because of taking profit by the people who entered earlier, closing. The selling pressure will continue, but it will be a signal. Is that okay? Is that okay? We are about to end, so we started a little late, so Yeah, this is just insights always. Yeah, we give you just some little insight, just to give you some picture. So by exactly 9, we are closing. All right, we are closing. Not clear there, coach. Yeah, no problem. You'll understand. Okay. I don't know what is not clear here, but I think to me it is really clear, unless otherwise. But it's clear. It's clear, really. I don't know. Julia, who is it? Julia, somebody. What is not clear? What is not clear here? Who is this? Julia's TikTok. What is not clear? Huh? Uh, oh, it is clear. Okay, it's clear. So that is about the shooting star. Um, long, you should exit. If you see a shooting star, if you are trading on the spots and you see a shooting star, you also exit. But then when you're in the futures market and you see a shooting star, it should be an opportunity for you to take a short position, okay? To go short or to short the market. Now, when you intend to take a short position based on the shooting star candlestick, what you're going to do is once a shooting star is confirmed and you really know it is a shooting star, what is going to happen is you're going to make entry on the next candlestick open. Then you're going to locate the nearest support zone there. Okay. Then that is where you're supposed to exit from in your short position. You'll exit at the nearest support. Then just in case, upon entry, the price tries to, some manipulation happens and the price tries to go against your intended direction. Do know that the high of that candlestick or the shooting star candlestick will be your most recent resistance area, which you're supposed to make measurement to, and then establish the percentage you get there as your margin call drop for your first call. It's that simple. But the beauty about the shooting star candlestick and then the hammer candlestick is that most often, once they are formed and then you make entry on the next candlestick open, it normally delivers. It just delivers. It's always straightforward. Okay, it is straightforward. And with that, I would like us to go through maybe just the chart. Let's just try to identify them, and you equally go and try to do them later on based on what we would be doing. So let's try to just identify let's identify the shooting star and the hammer candlestick pattern on the chart, and we see when they are formed what normally happens. So let's see when these candlestick patterns are formed, what normally happens. So let me go to my favorite time frame. My favorite time frame, trading time frame. So let's begin with a hammer. So let's see. Let's come here. We're going to begin from this point. So do we see a hammer? That is a hammer, right? Where was it formed? Oh, sorry. Where was it formed? It was after a long what? After a long movement. After a long downtrend movement, then it was formed. Then immediately, once it was formed, in this case, what would you do? what we would do is, in this kind of movement, let me see. We had this one here. To this point, I think, if I can monitor that movement, just then we had from that point, the price reversed, I think to around here, and then it went down. Now we are there. We are going to be sighting at our hammer. That's a hammer, right? So from just what we learned is that when you see a hammer candlestick, you already know what is going to happen. Remember, if we were to base on establishing support and resistance, it was going to be easy for us, right? This was going to be our, obviously, this was going to be our support. We put it on the low. Then from that candlestick of the hammer, based on that candlestick of the hammer, assume that was the candlestick we had come across when it was just closing or when it was on the process of concluding in its formation. Then it means with that regard, this would be our resistance, right? In that regard, if we had come across that hammer and when it was just in the point of closing up, then it means that already we know that the hammer candlestick has been formed around our support zone, right? Right? You see here? So it has been formed around our support zone. So because it is formed around our support zone, literally what we would do, would make entry immediately once it closes, meaning we shall make entry at the next candlestick open. We take our profit to this nearest resistance. This will be the most recent resistance, right? We'll take profit to that point, and that will be around 1.7. And then we measure from point of entry or the candle open to this support. The percentage we get there will be the margin call drop for the first call. And boom, would achieve our TP. As simple as that. But of course, because we based on support and resistance, remember? We based on support and resistance. We first establish the support and resistance, and then we come to see where is that hammer being formed. And we only to realize that it is being formed around a support zone. So that means we're in the surface area of trade entry, okay? Or of going long or taking long position. So what we only need to do is probably know how much to take as profit, know how much to set as our margin call drop for the first call, and above all, remember, we're still dealing with support and resistance, but the candlestick chart pattern is powerful in that even if you base on the support and resistance alone and the candlestick pattern, you will always have a good result, even if you don't add in an extra indicator. But sometimes you may just want to understand what the situation is in the market based on maybe what you're going to be seeing on the candlestick, because depending on the, on the indicator, depending on the indicator you'll be using. If you intend to use a momentum indicator, well, if you intend to use an indicator that helps you understand the status of the market, it is as well good. So it depends on what you want to add in, to flavor up your analysis. But with this, you're good. As long as there's a hammer, establish your support and resistance area, mark them, and then wait for it to close, make entry on the next, and not open. As simple as that. Okay? Is that clear? Let's look for the next hammer, probably, and just this time we're just going to see what happens once it is formed. It has to be formed in the course of a downtrend. So if we have to look out for a downtrend, it has to be formed in the course of a downtrend market. Yeah, we may have one like this also. This could equally qualify to be our hammer. This be a hammer with an upper wick at least, and it was formed in the course of that long movement. It was formed in the course of this downward movement. After a long downtrend, it was formed. Then immediately it was formed, the market's price reversed and went to the upside before coming back, to retest our zone here. So in that case, you'd make entry where? That will be the next candle open, which is this, would be your entry. And you would take profit. You would establish this That will be your margin what? Your margin call drop. And you will take profit to the nearest resistance. In that regard, that was a good journey. A very big movement, but let's see. Since there's 15 minutes time frame, we will make entry. Now, in this case, if you're keen enough, we would really see this could be this point. Let me see. Here, if you check on this movement, all the way to this point, by that movement, we could literally say this will be our most recent resistance, right? But if you look closely in between this area and this area and try to look at the previous movement, you will not ignore this reaction zone. Okay, that means there is a price reaction zone around this point, because we saw it react here. It went up, came down again, reacted on the same point, came up before now coming to break down at a later time. So we wouldn't ignore this as a price reaction zone. So possibly, if we were to draw a line there, we will realize that it is actually one of those price reaction zones that we can't ignore, which will be a basis of us taking profit from our point of entry around here. We cannot ignore that, right? So if we could do that, let's try to see if it is a valid price reaction zone. Let's just mark that area where there was a double support or a double retest. If you're going to go up backwards, it could be something of significance. Let's see. I think it is a pretty good area. It's a pretty good reaction zone based on what we see. So that means we cannot ignore it, because if you check here, so it could be as a mini exit point to that upper part, right? So that means in this case, if you come across that, if you had entered here, your target should be at this resistance, that point. Even if you wanted the other one, you could still achieve it. If you're patient enough, you consider the other one, all right? That upper one, this one. Consider that, you will achieve it. You will achieve it, but I think at a later time. Let me see. You will achieve it. Let me see. But at a later, yes, at a later time, you will achieve it, but at a later time. But remember, we're dealing with 15 minutes, so this could be either in 2 hours or 3 hours time. Then you'll have the coin delivering to 6%, right? But after, first of all, coming down, taking off your margin, buying your margin calls, and then later on picking up. That is if you want the other big movement, right? Yeah, you could still achieve it. But if you want an early exit, don't ignore any preliminary reaction zone that you may come across. Okay, if you're trying to make entry, because there are some of them that may be silent but will occur in between. So it's a matter of seeing what happens in between. If you see the range is very long, try to see if there is any that you can identify in between that range. And that could be a significant point of decision making, either entry or exit at the same time. So in that case, that is what would have happened. Okay. Yeah, and lastly, probably about, let me see. Let me just come here. Okay, so so that is we can say that is typical of what? Of a hammer and its characteristics upon formation. Let's see if you can see any evening star. I mean shooting star, not evening star, but shooting star. And I think, yeah, we have one here. Is this a shooting star? Is this a shooting star? That's why the shaker. Is it a shooting star? Is this something similar? Is this something similar? Is this a shooting star? I think it is. It is with small lower wick. Where is it? Okay. Where are you? Where are you hiding? Here. Here. I think this is a shooting star. So, because it is a shooting star, that means if you had made entry earlier on somewhere and you see a shooting star, or you want to make a short position and you see a shooting star, you would make entry around there, take your profit to the nearest support, right? Measure from point of entry to the high of that shooting star candlestick, and that becomes your margin call drop for the first call, which I think later on was also called upon. Here, if you see here, it is later, but instantly, immediately after seeing the shooting star candlestick, when you make entry, you can easily the price easily delivers to your profit, right? And it is only later if you want a bigger one, a bigger TP, probably you're looking at a longer trade. That's when you have to be patient. That means the next exit point for you in this case would be around here. You get that? So you'll have to wait for that long. So if this is your exit point, this will be your support zone too. But if that is the target of 3%, you'll have to wait. But the price will first have to, consolidate a little, and then it will finally deliver like it did here. See, it finally touched here. You see that? That is at a later time. But after first calling what? Calling off this margin. See that? At a later time. The first phase it delivered, it came back, called off the first, then it delivered the last bit. You see? So if you are this category of trader who bases on taking partial profits, if it hits to the first support zone, maybe you can sell 50%, take profit for the 50%, then you hold on and will retain the others for the next move, which will give you the 3%. And still it is good. It just depends on the strategy actually you want to employ. In trading, it's just about the strategy. It's about being intentional, all right, and objective. Okay. Try to minimize the psychology, the fear. Try to minimize the aspect of the greed. $1 a day is better than nothing, right? So just take something other than being liquidated. Just need to be patient, execute your trade accordingly, and you'll be good. I think we can end there. You can now go ahead and continue the practice. You can go ahead and try to identify your shooting star candlesticks and see what happens. Try to go ahead and identify your hammers and try to see what happens. Okay, and then keep on practicing. You draw your support and resistance. See, it would be nice if you just come across it and try to see, if you see it, what happens. Try to estimate what the next movement will be like, and later on check if it really delivered as you had planned or as you had analyzed. Okay, yeah. All right, so I hope we're okay at that point. I hope you're good at that point. Yeah, so yeah. All right, so I think all right, so okay, the time frame, me, I love using 15 minutes and 1 hour. 1 hour helps me visualize what will happen in the 15 minutes. What will be happening in 15 minutes trading session. The 1 hour helps me to project, what happens. So I love the 15 minutes time frame, but I can have a projection. I can have a bigger picture or an insight on how the 1 hour trading session will be like, using the 1 hour time frame, but I'll go down or boil down to the 15 minutes to be making entry. And yeah, so really the candlestick, I mean the time frame, you know, it's upon you really to decide on which time frame you want to be using. There's no fixed time frame, but though I would recommend the bigger time frame should help you forecast. Okay, the bigger picture. You can have a focus on the higher time frame, then you go to the lower time frame to, you know, identify those opportunities, the trade entry opportunities, trade entry opportunities, or early entries. You can be doing them on the smaller time frame, but have a forecast using a higher time frame. You can choose 4 hours, then you trade in 1 hour. You can choose 1 hour, trade in 30 minutes or 15 minutes. It depends on really how you want to approach it. And then you make it a point that it's what you're going to be often used. And that is where you're going to be deriving your trading strategies. Yeah. Okay. All right. Thank you very much for those who have been in attendance. Thank you. Leader Shem, happy to see you there. Shanita, happy to see you there. Queen, happy to see you. And a couple of others, Saj. Yeah, happy to see everyone on the call. And for the leaders, Doris Angel, happy to see you. Leader Soul, happy to see you there. Yeah. So thanks for being there. Thanks for being in today's call. And I hope if God allows and I have some time tomorrow again, we shall meet and we'll see. Yeah, but just do know I'll have maybe for this week, I may take you through. Yes, you know, that's for this week. Yes, to handle those areas that have been requested to handle. Yeah. Yeah. So thank you so much. Do have a blessed day and happy trading to all. Yeah. All right. Bye bye. You guys can exit at will.